Welcome. It's yet again another day. We're gonna see where you're headed and how you're gonna trade these. So what you're looking at is USD cards. This is the monthly time frame. From the monthly time frame to the lower time frame, that's how you're gonna go and see where liquidity is sitting at and how we can maximize on that. So this is the liquidity, mastering liquidity part 2. So you can head over to part 1. The link is below, it's down below the description, and get to watch, or rather to get more information on what the market is doing. Yes, so in my place, this is morning, and I hope you guys are having a nice time wherever you are. So I'm gonna head over to this 1 month or the monthly time frame. What we see here is that from the monthly time frame, we induced buyers here, monthly induced buyers, and more buyers got in. You see, after they have been induced, where do they enter from this extreme, from this mitigation block? This is where they enter from. And what we see is that at this high we have this level. How we see it supports sellers. So these sellers, where were they induced? Down here. So that they were induced, we know that the highs are gonna hold. But here what we have is buyers induced. Buyers induced by this move to the upside, and also buyers induced again. So that this tells us that we have liquidity to trade below this low. So we have liquidity. So these are build up of liquidity in form of a build up of liquidity. Here the retail traders, they are being involved. So these are the smart money traders. They enter. So the next time we look to enter this at this level, and you can see that market came down, up. They entered from this low. They also entered targeting this high, but what can you see? This high never took out this high. Okay, actually it took out the high. So what happens? You have to entering. They entered this low. They entered again. So these are trend traders. They entered here. So these buyers induced up here. They entered again. How can you see? Market came aggressive down, then bought back up, trapping these sellers that were induced at this level. So as you can see, we have these buyers down here. This is our trap. It traps. We've trapped. Market has trapped. Buyers. Also at this level down here, more buyers have been trapped, rather they have been induced. So this low, when you induce buyers, we trap them down here. We again induce more buyers and we trap them, rather they are trapped at this level. That's where they are trapped. as you can see. Then we have a false move down, inducing sellers. This inducing sellers, then market goes against them. So this tells us that the highs are going to be false reactions to sell from. So this high is a false reaction to sell from, and also this high up here is a false sell-off to occur. As you can see, a sell-off, then boom, market explodes to the upside, taking out this high, taking out that high. So these sellers that were induced, they are taken out. As you can see, they are swept by this high. So this tells us that all this liquidity, we have liquidity at this low, and this low cause induced buyers up here, and this where they entered from here. So all, as the market was moving up, it engineered liquidity. And where is this engineered liquidity? We have this liquidity, and also have this. So these are trendline liquidity. These are our trendline liquidity. So at this low, so we had this move to the upside, inducing buyers and taking out these sellers that were induced. Sellers induced, they entered at this order block. As you can see, we had first reaction. No, we had our first reaction, second reaction, third and fourth from this level here, from this level. So that's why like little traders were being involved in, or rather like they're entering the market from. Yes. So what do you have here? So at this high, we have our sellers taken out and buyers getting induced at this high. So what does that tell us? That lows are going to be false reactions. So we head over to the daily time frame. As you can see, as induced buyers at this high, buyers induced. So we want to see lows to be false reactions, induced up there. What do we have? False reaction from this low. No, like from this low, then comes down, goes up. This is a trap move. This is where we are not supposed to be involved. Why? Because these induced buyers to the upside. So if you want like to buy, we need to come below this level, then buy. But because we never took out this low, this means that we have generated liquidity like this. So this is liquidity, and as you can see, the market moved down, went up, then moved down, went up, down, went up, and it came down all the way to, went up and came down all the way, taking out this liquidity. So if you want if the market wants to move higher, then this level over here can be a good target. But let's see how the market is doing. So bias induced at this high, so what we know like lows are going to be traps, and this is the trap. So this is the trap, and yeah, we truly trade to that high, and this is a false BOS to the upside. Why? Because we have liquidity resting below this low, Why? Because we have this low respecting this low. So this we don't want trade structure. So structural traders, they entered their trades from here, and what happens? We have big candle, taking out all that liquidity. So you head over to the 1 hour time frame and see what happened from that fake BOS up there, from this high. So this induces bias, and we know that lows are going to be traps. So this low, we have some trading inside there, and you also have this low. We also have this low over here. So this is our trap move. This is our trap move to the upside, because bias induced. So what do retail traders want to see? We induce bias, then we come back to another block, then buy again to the highs. But what here we do is that market goes all the way down, taking out the liquidity of the buyers. So yes, so as you can see, this low, these two lows, they hold price, but they hold price, yes, but for a short time. So as you can see, this high taken out, then market moves down again. What they want to see is that the lows to hold. So you can see from this low, it holds, yes, but for short term, for a short period of time, it holds, comes up, and these move down also into the sellers. So here we see them entering at this level. So if we want to sell, we need to see price come above this high. Yeah, and we know that down here we have buyers that were induced from this level up. So our liquidity is resting below this low, and also we have liquidity resting below this low in the higher time frame. In the higher time frame, which is the daily. Yes, so these are, as price moved higher, we formed a liquidity block up here, then we had these here we induced buyers to the upside. So we want to see lows hold. So this low holds the buyers. And what does that tell us? That tells us that we have engineered liquidity at the levels. So we have liquidity here at this low, and this buying to the upside, there are those who panic and they buy, so they'll be putting their stop losses will be here. So stop losses resting below here. Also you have other stop losses below here, so that tells us that we have money resting at those lows. So what happens, because we know that this high here, it is our liquidity block, we don't want that high to be taken. As you can see, the high it was not taken, and the high was not taken. And from here, this is where you could involve yourself in, from this liquidity block, and targets the this is the first target. This is where you can take partials at this low. This is also another target, and finally this is the last target down there. If you could want like refined entries, you could go into the M15. From the M15, what you can see is that there was liquidity that was engineered, rather that was built at this high there. So sellers that were induced. So any sellers that were induced below this low, they will want to enter from, because this is like a BRS to the downside, so sellers could want to enter from this level. So we enter above their stop losses. So from this level up there, that's where we could involve ourselves in. So that's if you want like a higher risk to reward. Yes. So this is a 1:7. Yes. Thank you for engaging, and see you.